So what I want from my people, and of course my client, my tenant will call me now. And she's calling because she got a 30-day notice. Now she's calling. But anyway, so what's important for my people to understand is you have to have minimum 3 streams of income, preferably more. If you have a JOB, that's your first one. Your second one should be real estate, because real estate appreciates over time. And that's very important. Third thing is, so let me just give you a laugh. You know, I get my emails on my screen. And so my tenant that just called said, can you send me your cash app so I can pay my rent?
You're so fun, that laugh alone.
And I'm laughing because her next door neighbor got a 30-day notice. Sheriff came, so she's like, let me pay for it. I don't want him to send me a 30-day notice. You know, so that was a good thing. But anyway, so to my point, you have to own real estate. So not only am I in the stock market, not only am I from Wall Street, but I'm also a real estate investor. So basically, I also am a licensed realtor. So I can actually show you a property, but I don't, because I don't want to do that. But I really am. The reason why I'm a licensed realtor is because I like to sell my own properties that have appreciated over the years,
like that.
Keep that income as opposed to giving it to another realtor. Even though what I have now learned is that as a realtor, when you sell your own personal property, it's personal. So somebody else may say something negative about your property, where a realtor would be like, oh, okay, would pivot me as my personal property. I'm like, well, what do you mean? So I had to learn better to let another realtor sell the property and just split it.
I like that. That's nice. I have so much to learn from you, because I that's what I'm in right now. I have a property and I'm thinking, if S comes to S and my job says, if you don't get this vaccine, we're going to let you go. What's my plan? What is my plan? So like, can I turn this previously multi-family home that's now a single family home back to a multi-family home and get the rooms upstairs, some tenants in, and make this thing work for me? I mean, you know, when your back is pushed, you know, you're like, what can I do? And
you have to pivot. And that's what you're saying. You have to pivot. And so to that end, I agree with you. And I look at everything. So just for the sake of your audience, let me just say, so I am not employed by, you know, the company. I'm self-employed. My self-employment comes from tradingisnothard.com, which I teach. I also trade stocks. I also am a licensed realtor. I also am a landlord, and I sell my properties, you know, back and forth. I'll buy some and flip them and sell them.
right.
So I've got multiple things going on, but at the end of the day, I'm not trying to wait for somebody to give me a check or going to a job that I don't like, or where they don't like me and don't appreciate my talent.
Absolutely.
And as a people, I think we have had to suffer through people who don't mean us good, aren't trying to elevate us to a higher level, and or prepare us to be elevated to a higher level. They're just basically using us, and it's corporate slavery. I'm just going to quote you. Oh, I lost you. So you're going to have to call back in. Let's do this. But I want our people to hear this. It's important. So let's say you have a 15-year mortgage. I don't know how old you are, but I'm going to assume that you're 30. Okay. Oh, when I saw AOL, I knew. But anyway, but we're going to leave that alone. Anyway, so, and just to give you a laugh, when I saw your name, I automatically just did gmail.com. And then something said, make sure you check to make sure that that's correct. And I looked, I'm like, oh.
I said, you still use AOL? I'm like, yes.
Okay. And me too. So that's why I was like, oh, okay. But anyway, let's say you're 30. Congratulations. So you have a 15, yeah, you have a 15-year mortgage. So if you have a 15-year mortgage, by age 45, your home is paid off.
Right.
What that also means is, let's say you paid $100,000 for the house, just as an example. By the time you're 45, let's say it's worth 150. You go back to the well, meaning the well being the bank, to borrow 50% of that money back, which will now be 75,000. 15 more year mortgage, 45 to 60. House is paid off. House is now worth 200,000. You go back to the well and take a 50% mortgage against it again. 50% of 200,000 is 100,000. But now let's think in groups of 10, because this is how I always think. If you owned 10 houses, so at age 30, you've got 10 people paying the mortgage. At age 45, they're now paid off. You had 10 that were worth 100,000 when you bought them, but 15 years later, they're now worth 150,000. Basically mortgaged 50% of that, you just pulled out $750,000. You do that every 15 years. People don't understand that's the power of real estate.
That's wonderful.
And that's what we've got to get our folks in the mindset of, because ultimately, if you're paying rent, you're paying my mortgage.
There you go. Period.
And if you've been a tenant of mine for 15 years, paid the mortgage. Wow. And I get to write it off. And this is what our folks need to understand. When you have a business name or a business, preferably it should be an S Corp, C Corp, an LLC, or incorporated. It should never be a sole proprietor.
Yeah.
Reason being, a lot of people don't know this. You own 10 properties and they're all in your name. Somebody falls on property number 1. A good attorney is going to say, oh, let me do a search on their name. Oh, they own 10 properties. They're going to enjoin all 10 properties in the lawsuit. Even though they fell on property number 1, they're going to enjoin all 10. You cannot sell one of them. And if you have one of them under contract, oops. A lot of people don't know that. So the other thing that you should do is you never put them in your name, nor do you put them all under the same incorporation. What you do instead is you do what is called a land trust. And the land trust is the address of the property. So if it's 123 Main Street, 123 Main Street Trust. If you own another property on Main Street, 127 Street Main Street Trust. Use the property address as a trust, and it's just paper. It's nothing but levels of paperwork that you use to prevent somebody from suing you.
Targeting your stuff. Yeah.
Exactly. So now let's get into what you really wanted to talk to me about, which is the stock market. So my company is tradingisnothard.com. In terms of my background, I started in Wall Street in the late 80s. So you can see from my white hair, not gray, that I'm packing quite a few decades. I'm a senior citizen legitimate. Without giving out my age, but anyway, I qualified for, what is it, the discount when you go to ride, NJ Transit, et cetera, et cetera, et cetera. But anyway, I'm gonna leave that alone. But what I will say to you is that I started working on Wall Street, as I said, in the late 80s, and I've never been somebody to want to work for somebody else. So I retired from Wall Street in 2001, 2002, I don't forgot now. 2002. And from 1995 to 2002, I acquired a lot of property, and the rental income from the rental properties, plus the fact that I had saved up quite a bit through the stock market, allowed me to go out and work for myself. And I have basically done that ever since. And what I want my folks to know is that Wall Street, it's set up for you to be scared of it. And I don't want you to be scared of it. I want you to embrace it and realize how easy it is to make money. So what I'm going to do is I'm going to show you a brief explanation of how the market works. Now, I had shared with you that I use a particular format, which is the elevator theory. I'm going to explain that to everybody now so that you can kind of understand. You can see my screen right now?
Yes, yes, I can.
Basically, that ticker or symbol is CLX. That is the Clorox Corporation. Okay, so what I'm going to explain is how you get in and out of the market. And I'm going to do that using an elevator theory. And let me just bring my camera down just a tad bit. Okay. So what happens is these candles represent each day. And let me just go up here. So you'll notice it says daily right here. And let me make this bigger so you can see it.
Yeah.
Okay, so daily. So basically I can go to different time frames. I can go to a weekly time frame. So each candle is a week, or I can even go to a monthly time frame where each candle is a month. But I can also go to a 60-minute. I can go to a 3-minute. I can go to a 15-second, so that each candle is 15 seconds. So I can actually see exactly what is going on in the market. But when you're trading, typically the one screen that you stick to is the daily. So I'm going to explain this for everybody. A green candle basically means at 9:30, it opened here. At 4 o'clock, it closed up here. During the course of the day, it went as high as all the way up here, or as low as this wick down here. So these little lines are what we call a wick.
Okay.
See them all over. A red candle means the opposite. It means it opened at the top and closed down at the bottom. So a green candle basically means it opened at the bottom, closed at the top. So you want to basically know, okay, on that day, it opened at $203.60. It went as high as $224. It went as low as $202, but it closed at $211, up about $8. All right, so you're with me so far?
Yes.
Okay, good. So when we take a red candle, let me come over here, it basically means it opened up here, closed down here. So on this red candle, it opened at 211, it closed at 204. Okay, so what happens is I have to basically be able to look at this chart and tell where the next level is going to be. Why do I want to know where the next level is? Well, I'm going to show you. And I'll draw the lines in right here. But actually, let me use another stop that's going in the opposite direction. Okay, everybody knows who Chipotle is.
Yes.
Okay, so it's the ticker for Chipotle is CMG. And let me try another one because that was an expensive one. Chipotle right now is $1,852 a share. So that's a very pricey stock. So let me find one that's a little less pricey. AMD. Are you familiar with AMD?
No. AMB?
AMD is in David.
No.
Okay. AMD is in the semiconductor side. So basically, if you have a computer, chances are the chip either comes from AMD or from Intel.
Okay.
If you're driving a Tesla and AMD have basically formed a partnership of sorts in which AMD is providing them with a certain type of chip for their computer screen. All right, so here's AMD. And this is a perfect example of what I'm going to show you. So you see all of these lines drawn in, red lines, white lines. So basically, I'm going to scroll this back. And what I did, so let's say I'm scrolling this back to this date, just as an example. So this date would be June 22nd. So what I would do in this case is I would say, okay, I want to know what my zones are going to be. And I would draw in my zones. I can actually show you where, and you can see it. This would have been a zone that I would have drawn in, and what happened? It came right to it. Further down the road, it came right to it. As for zones to sell, this would have been a zone right here, and this would have been a zone right here. It came right to it. Now, we all knew that AMD was going to go up and go through the zones. And the reason why we knew it was because of these partnerships that I just shared with you. Plus, the CEO of AMD has basically been stealing market share from Intel. So we expected that they were going to come up to this level right here and beyond. And as you can see, it came down right back to my level and then shot up. So this was today, this was yesterday. And I'm going to show you. I really shouldn't do this, but I'm excited to show it to you. So let me just share my screen. You can see this screen over here.
It's a little small, but I can kind of see.
Okay, let me just get my cursor over here. Right. So you see what it says AMD? Right here?
Yeah.
Okay, so basically what it's saying is that I bought 20 contracts of AMD for 14 cents. Now, basically when you buy a contract, that's an option. When you buy a contract, it's equal to 100 shares. So you have to multiply that 14 cents times 100 shares, which really means it's $14. So I bought 20 contracts. And ultimately, that's what it went to, $1.58.
Wow.
Right. So the point I'm trying to make to you is that there's money to be made. You just have to know what you're doing.
Right.
Ultimately, what I'm here to do is to show you how to do it. And quite simply, it's easy to do. Are we back on this screen here?
Yes.
Okay. So let me give you an example of how to draw in the lines. Find one that is reasonably priced. All right, and something that everybody knows. Dollar Tree.
Yep.
Symbol is DLTR. Now, basically, what I would do in this scenario, and you can see it came right to it. I'm going to make this bigger so you can see it. Okay. So basically, as you can see, I drew in my lines right here, and it kept coming right back to it, kept coming right back to it, kept coming right back to it. This is how you make money, because what it's doing is it's going between $98 and $100. And I'm going to draw my sell zone up here for you so you can see. And then what I do is I change the color so that I know it's a sell zone.
Right.
I change it to red.
So the white is the sell?
White is the buy, red is the sell. So remember, each candle is one day. Okay, so what I will do is I will buy an option going out 1 week, and I'll show you what that looks like. I've got 4 monitors up, so that's why I have to figure out where did my cursor go. Okay, so this is, as you can see, it says DLTR, and I'll increase the size of it so you can see it. So what I'm doing is I'm buying going out because today is the 30th, so you can't buy an option for today. What happens, they decrease in value as each day goes forward. Okay. So I'm looking at August 6th. So if I were buying the $100 call, it would cost me $1.30. If I wanted to sell it back after I bought it, I'd be selling it at $1.14. So ultimately, you want to make sure that when you buy it, it's going to go up. But I can also go out further. I can buy the $110 strike, which is 10 cents. Now, I know for you, you're saying, I don't get it, more than likely. But what I'm going to say to you is, remember, I showed you an AMD call that I bought. AMD right now is at 106. I bought the 175 calls. It was way out the money. The further out the money you go, the cheaper the option is. The option, the option was 14 cents. But look what I turned around and sold it for. And I did that all within the same day.
That's amazing.
Right. And so this is what I teach, and it's easy. And the easiest person to teach is somebody who is, what is it, ADHD or ADD, whatever it is. Because that type of person is used to doing 15 things.
Yeah.
And so they're the ones who be like, oh, I got to look at this one. I got to look at this one. And they can do that. I can't even do it. Okay. So I'm amazed at some of my students that I've taught who are like, have you looked at so-and-so and so-and-so? I'm like, and I said, blah, blah, blah. I'm like, how do you do that on one screen? And I got 4. Okay? But it's really easy to do. And once our folk get the understanding of a buy zone and a sell zone, and let me go over that with your audience. So understand that when you see these candles, we would be considered a retail investor. We're not moving these candles. The banks are moving these candles. The hedge funds are moving these candles, because there's millions upon millions of shares of volume done every day per stock. Okay. So what happens is, when we place an order, as I explained to you earlier, you have a market maker who takes the orders. A lot of it is done electronically now. You're selling 10 shares or buying 10 shares or buying 10 contracts of an option, and you've got somebody who's spending $1.5 million on an option contract. Obviously, they're going to be in front of you.
Right.
There's no question. And what happens is, when that does occur, that's when you see a candle jump. So if you were trying to get in here, and basically somebody buys 1.5 million shares, that candle's going to jump out. But your price was at 98.79. You're not, here's the price right here. You're not going to get it. And so you're going to have to sit there and wait for it to come back. Well, it came back here, but there are other banks who have orders in waiting for it as well. So again, you're still not going to get in. So how do you ensure that you get in? You get in at 99.11. So you're paying a little bit more for it. You wanted to get it at 98.79. You get it at 99.11. Okay, and then basically it comes in here, but then it starts to go out. Now, instead of jumping out here at 100.05, jump out at 99.99. Why do you do that? Because you're ensuring that you're getting your sell and you're getting out and getting your profit.
Right.
What's the elevator theory?
Right. That's what I said. It made me think about the elevator theory you were talking about. You want to be in the building.
Exactly. So how the elevator theory works for your audience is, let's take a 20-story building. You have your first floor, you have your second floor. If you know that the banks are sitting at the second floor and the first floor, and that stock is going to jump up, or let's say using the elevator, only 20 people can get on at a time, and you have 100 people sitting there waiting, you're not going to get on that elevator. However, what you can do is you can go to the third floor, knowing that it's going to come down to the second or even the first floor, but you're now on the elevator and it's going to start going up. And then when it gets to the 18th floor, as opposed to waiting to the 19th and the 20th, when the banks are going to get out, you get out on the 18th floor. Basically, you're operating between the third floor and the 18th floor. You're able to get in the trade, you're able to get out with your profit. Now, did you make as much as the banks? No. But if you made 80% of what they made 90% on, I'm happy. Okay. Additionally, what we need to understand is, it's called the compounding effect of money. If you could make an extra $100 a day, and let me pull out my trusty little calculator. So that's 500 a week. That's 2,000 a month. That's 24,000 a year. Now let me explain.
Wow.
You'd be happy, right? Some people, yeah, that's not enough money. Well, is your job giving you a $24,000 raise? No.
Exactly.
But let me explain the compounding of money. So with that 500 that you were making, let's say you were buying one contract. After a month, you've now got $2,000. So now ultimately you're able not to buy one contract, but maybe you're able to start buying two contracts. So the next month, instead of making 2,000, you made 4,000. But now instead of being able to buy two contracts, you're able to buy four contracts. And that's the compounding of money. So by the time you get to the end of the year, that 24,000 is now a six-figure 150,000.
Wow.
That's how you have to think.
Mm-hmm.
But you have to not be greedy. Too many people are looking for a fast fix. Doesn't work that way. Anything that you get too fast, you're going to lose just as fast.
Yeah, we see it what fast money looks like for many people.
That's what I don't want to happen. So my goal is to teach you how to chart. Once I teach you the basics of charting, then I teach you the advanced course, which is much easier because you have the basics. So it may take you 2 months, 3 months, maybe even 4 months to understand the concept between your charting for the basics course versus the advanced course. The advanced course will take you literally 30 to 60 days and you got it.
Mm-hmm.
I teach you how to scalp. Scalping is basically snatching $50, $100 in 20 minutes, an hour. Shut your computer off and walk away. Don't get greedy because you'll give it right back. Just walk away and you're good. And once you learn how to scalp, it's a whole new world because you will basically at some point be able to say to your job, I don't like the way you're treating me. I don't need this. I can get at home and make the same money and more.
Yeah, that's what we want to be able to say is, I mean, really, we need to learn how to be self-sufficient and find out, like you said, more than one way of getting income is definitely key.
Absolutely. So I want to ask you a couple of questions.
Oh boy.
The audience that you have, what type of businesses are they involved in and or what type of jobs are they in and what are they looking for?
So I can't speak for only the people that I've worked with a few. One is a martial art instructor. Another one was had her own crystal business, a chef. Does a lot of consultation and she life coach. A little bit of, I mean, I've had breeders, I've had a little bit of everybody. I mean, ultimately, what they're looking for is having more than one way of bringing in more than one way of bringing in a stream of income. So, you know, from their business is one way, but they mentioned marketing being another area where they're kind of like not doing so well in, but just being able to bring in more money to go back into the well of their business.
So, and this is perfect for them because this is definitely a stream of income that is easy to make. It's actually easy to understand. Wall Street has basically made people afraid of Wall Street and made it seem as if it was so difficult. It's not. It's not at all. Basically, what I do is I teach it in a format, just as I use the elevator theory. That's all this is. This is the elevator going from the first, second floor up to the 19th, 20th floor. That's it. And I'll tell you, with DLTR, I have played it between 98 and 100 for the last 3 weeks. And remember, each of these candles is a day. So basically, you're looking at since June 25th, I've just gone back and forth with it. And you can see it goes back and forth to 100. And all I'm doing is I'm basically scalping $50, $100 a day just off of that one stock. And I don't have to sit and watch it because what I can do is I can put in an alert and the alert will tell me. So what I'll do is I'll put in an alert for right here.
Mhm.
At this level, let me just get this right. I'll put an alert for right here to let me know, okay, I'm at 99.76. I know it's going to go to 100. As you can see, it's at 100.32, but I want to get out before it gets to the 100. I'll get out 99.99 because let me share this with you. The banks always get out on an even number. And so do most people, 100, 105, 110. So I'm not going to wait to 100 to get out. I'm going to get out at 99.99, 98, 99, 97. Always do an odd number because even number. And you'll always get executed. Executed basically means your trade gets executed. You're selling your product, buying in. And the same thing when I'm buying. I always buy on an odd number and I always get executed. And that is what I would recommend if you do get into this business. Never forget, always get out on an odd number.
That's good to know. Now, a question with cryptocurrency and all that, that seems to be everyone is so into that. Is that similar, or is that a completely different realm of?
Excellent question. I'm so glad you asked that question. So this is Bitcoin. So what I'm teaching you with charting, you can use for cryptocurrency. Also for Forex, it's all the same. However, with cryptocurrency, you don't use a daily chart because it moves so much quicker. So I would probably use an hour, 60 minutes.
Okay,
but there it is right there. And you can see the price right now is $39,048. It just moved to $63. It just moved to $60. So it moves very quickly. But ultimately, I mean, I could chart this, and just to show you how quickly, once you've gotten the hang of this, you can just look at this and say, okay. So I use this candle right here. Now it's not fresh, and I'll explain that later. So then I would move it to this one right here. That would be the new zone. And then I have to find this zone here. But this is just how quick it is.
Wow. Is there any advantage or disadvantage to using Bitcoin versus just trading, period, or is it pretty much the same?
Repeat the question.
Bitcoin, cryptocurrency, like are there any advantages or disadvantages to using that versus just regular trading?
Okay, so let me say this to you. Whether you're doing Forex, whether you're doing crypto, whether you're doing options, whether you're just buying flat out shares, you have to find the niche that you're comfortable in. But as far as charting is concerned, you can use what I'm teaching you for all arenas.
Okay.
So it just depends on which one you're more comfortable in.
Do you have a preference?
Personally, options. I like options. Do I own crypto? Absolutely. However, how I buy crypto is, are you familiar with dollar cost averaging? Okay, so let me explain. When you're in school, you get 100 on one test, 80 on another, you got a 90 average. It's the same thing with crypto. I buy some in January, I buy some in February, I buy some in March. I've got an average price. So I don't care what it does.
Right.
And that's an easier way of lessening your losses. So when it drops down significantly, buy it there. And that brought you down to an average. But then when it comes up, you're buying it at all the different levels. You've got an average price. The thing is, in our community, again, when you have money to invest, firstly, you don't invest what you're not willing to lose. Secondly, let's say you have $10,000 to invest. You don't throw the whole $10,000 in. You start off with 20% of that 10,000. Start off with 2,000. You leave the 8,000 on the side, just in case. Because if you lose the 2,000, you just lost 2,000. You still have 8,000 left. So it's not the end of the world. Whereas if that
I apologize. Can you pause this real fast?
Sure.
I gotta check on the little ones. They seem they're being busy. 1 second. I'll be right back. 2 seconds. Don't forget that thought, please.
Okay.
Who's outside? Get in the house. Who's outside? Right.
So basically with Bitcoin, Ethereum, I like them both. But what we as a people need to understand is that money moves. And
I can't see you, Al.
really, I wonder why. Now you know this is too funny. Okay. I don't know what happened. Give me a second. What did I do? I don't know what I did.
You went into the shadows, Al. You got to come back.
Okay, let me see. You still can't see me.
I see it. You got to see if you turned off your video.
Oh. Duh. Okay. So let's figure that one out.
You can't just tap on some type of there you go. Okay.
Right, so for your audience, listen, like I said, I'm a senior citizen. Technology is not my forte. I'm learning. Okay. And I'm the one who turned it off. Duh. Anyway. So okay. So what I need your audience to understand is that money has sectors, and you can literally watch the money flowing from sector to sector. That's one. Two, what I teach all of my students in the basics course is before they get involved in, and let me go to Yahoo on this screen so I can show you what I mean. And for your audience, you should always go to finance.yahoo.com to basically look at what I'm getting ready to show you. So for example, excellent. Okay, so you will notice, and I'll make this, can you see these tickers on the side here, these different symbols?
Yeah, I really can't read them, but I can see something there. They're really pretty small.
Yeah, and unfortunately I can't make it any bigger. But for instance, what I'm trying to get you to understand is there's a thing called ETFs. ETF stands for Exchange Traded Funds. And let me explain this to your audience so that they'll understand. If you have a 401k, more than likely your job offers you mutual funds. Okay? Mutual funds get priced, most people don't know this, at the end of the trading day at 4 o'clock. So basically what that means is if that stock has moved up and down during the course of the day, or that mutual fund has moved up and down during the course of the day, you're getting basically that 4 o'clock price, whatever it is. But if I wanted to buy, I would have preferred to have bought it when it was down here, not when it was up here. Or if I was selling, I would prefer to sell up here, not here. And that's what people don't understand about mutual funds. Whereas exchange traded funds operate the same as mutual funds, except you can buy them at 9:30, you can
Right
at 10 o'clock, you can
right
buy back at 12 o'clock, and you can sell them at 2:30 or 4
I see.
o'clock. So I rather have exchange traded funds. Okay. That's the first thing. Second thing, there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I think it's about 11 sectors. So the sectors are financial, tech, utilities, healthcare, industrials, energy, consumer staples, consumer discretionaries, real estate, materials, and communication services. And that would be all of these right here. Anything you see XLC, XLE, XLF, XLF is the financials. XLK is the tech companies. XLI is industrials. XLV is healthcare. XLU is utilities. XLRE is real estate. And XLY is discretionaries. I would prefer that anybody getting started buys ETFs instead. Now I'm going to share my new screen and I'm going to show you why. It makes more sense for you So right now, you can see my Yahoo screen.
Yeah.
Okay, so this is XLF, the financial services. Let's look and see who's in there. Berkshire Hathaway, JP Morgan, Bank of America, Wells Fargo, Citigroup, Morgan Stanley, Goldman Sachs, BlackRock, Charles Schwab, American Express. As opposed to, let's say, somebody decides to buy Wells Fargo. Wells Fargo is not doing fantastic. If you put all your eggs in that basket and it goes down 30, 40%, you just lost 30 or 40%. But if you buy XLF, it has all of the banks in it. So if one bank, let's say there's 20 banks in there. If one bank goes down, and just to show you as an example what I mean, let me go to XLF. Okay. Let me just change this and then you'll get it. So I'm going to go back to a daily chart. We have something that is called ATR. It stands for average true range. Simple thing, what it means is what that stock moves on a daily basis. So on a daily basis, XLF moves 68 cents. That's the ETF. Whereas if I look at, let's say, Bank of America, which is BAC, let's look and see what the average true range is of Bank of America. Bank of America moves $1.06. That one bank moves $1.06 a day, whereas the ETF with all of them in it only moves 68 cents. So would you rather lose $1.06 in a day, or would you rather lose 68 cents?
Absolutely 68.
But just to give you another example, let's look at JP Morgan, which is Chase Manhattan Bank. Let's see how much they move in a day. They move $3.47 in a day versus the ETF, which has JP Morgan in it, moves only 68 cents. Oh, and I apologize, I forgot to share my new screen so that you can see it. Oh, I am sharing. Okay. So basically, this is JP Morgan. And if you look in this little corner right here, which I'll make it bigger so you can see it. Can you see where it says in purple 347?
No, it didn't even get bigger.
Oh, really? It didn't? Do you see where it's purple though?
I see purple.
Okay, but you can't see the numbers, $3.47. But now I want to show you Goldman Sachs, just to give you an example, to compare apples to apples. Goldman Sachs moves $8.73 a day. The ETF, XLF, moves 68 cents a day. So the reason why I'm saying this, get into the ETFs, because ultimately you've got several funds, or I should say several stocks within that fund.
Yeah.
It goes down, you're not losing as much. And let's look at the technology ETF as an example.
But if it goes up?
If it goes up, it doesn't go up as much. But while you're learning, I'd rather you not be worried about the fluctuation. So XLK, which is the technology, moves $2.06. Now let's look and see who's in XLK, just to give you an example of what to expect. Okay, so I'm going to come back over here and I'll type in XLK, which is the technology ETF. And as you can see, it says the Select Spider Trust Technology Sector, Select Sector. And who's in it? Let's see. You're not going to tell me who's in it. Why not? They want me to sign in and I forgot my
You said you forgot the
there's more than one way to skin a cat. And so let's see if this is gonna let me get in there and do it. Let's see. XLK. Oh, you guys are doing the same thing too, huh? Everybody wants to show what's in there. All right, so as we're talking, I'll figure out a way to tell you who's in it.
Okay.
It's always more than one way to skin a cat. You're not going to get me that. But let me see. Here we go. Okay. So who's in here? still not telling me. I'm actually on the holdings tab, which is supposed to give me the list of who's in here. They still want me to sign in. Wow. All right. What's happening is a lot of these websites are trying to make you pay for information. So you always have to go to another website to get the free information. So I'll figure that out and come back to it.
Okay.
But we'll get it. But the point I'm trying to make to you is initially in my basics course, I want everybody to feel comfortable and not have to worry about their money fluctuating. And
Right.
you're able to see who are the better performers within that particular sector. So if we're talking about the financials, you want to look at who's the better performers. I can tell you it's normally Goldman Sachs, Bank of America, JP Morgan, Citigroup. Those are the real performers. So by the individual stocks, those are the ones that I'm going to buy. Okay. In the technology sector, I'm going to be looking at the Googles. I'm going to be looking at the AMDs. I'm going to be looking at Apple. Apple is fantastic. Now, admittedly, you guys.
Of course.
I'm sorry.
I said, of course, Apple will be fantastic. Everyone's on it.
What a lot of people don't know about Apple is they have a huge amount of cash just sitting there.
Wow.
And what they did was they just applied for a loan. Now you might say, why would you apply for a loan now if you've got all this cash sitting there? For two reasons. And we have to think this way too. Never use your own money when you can borrow money at 0.25%.
Hello. That sounds like why not?
Wish we could get that rate.
Right. Usually it's like
Okay.
6 points.
Exactly. And so that's why they are borrowing money now. And you might say, well, why are they borrowing money now? They're borrowing money now for something they're going to use in the future because they know in 2 years we'll probably be in a recession and they won't be able to get the money at that rate if the banks will even want to loan money. So they're basically getting that money now and they'll put it on the side because clearly they'll make more interest than than they have to pay the bank. And it's a write-off for them anyway.
Right, right.
So that having been said, I want us as a people to be financially literate. Right now, we're illiterate, but it's easy for us to turn that around. And within a year's time, I know that through my course, you will be not only financially literate, but you will be prepared at some point down the road that if your job is just not you'll be able to say deuces. And that's the point. And I was able to do that, and I want the rest of our community to be able to do the same.
I mean, like, now, I mean, talk about like knowing really nothing about trading. Just from what you shared, that's pretty much it. So just because I work with examples that, you know, visually I have to see it in my head to understand it. So if I just say, that's it, I got to leave, or my job told me, that's it, you're gone, but I have some money that I can put away. I know you were saying when you're trading, look at it as money that you may not get back. So how much should I put in? I just lost my job and I'm trying to get some money. Like, how quickly would my return be, on being able to get something in that case? Because, we go into scare mode, like, panic mode. So,
good question. So let me answer it this way. Firstly, we should all have a Roth IRA. And, well, you're going to have a copy of the tape, so you're all right.
Yeah.
I saw you look at my piece of paper and write it down. I know. You're going to have a copy of the tape, so you're okay. And so for your audience, she's asking questions not only for herself, but for you, because everybody's in the same boat, basically. So let me just say this to you. What is a Roth IRA? A Roth IRA basically means that you're taking money that you've paid taxes on already. So if you've got money sitting in your bank account, that was money that your job paid you, that taxes have already been taken out. So you can put in a Roth IRA up to $6,000 a year. If you're over age 50, you can put in $7,000 a year. Now that's huge. One. Yeah. Two, let me explain why that's so important. So let's say you take that $6,000 in your case, and you've able to put $6,000 away for 5 years. That means you now have put away $30,000 in your Roth IRA. Plus, let's say it's grown because you invested it in different mutual funds because you didn't know you should have bought exchange traded funds and you didn't know about my course. So let's say your $30,000 turned into 40,000. What happens is that 10,000 in growth is tax free. You don't have to pay taxes on that money. Now, this is the beauty of what I do. I'm able to turn my money many more times over past, that 30,000 is going to be 6 figures. It's tax free because I'm doing it within a Roth IRA. So what happens is most people will go to a bank and open up what is called a traditional IRA, which basically means it becomes taxable at age 70 and a half. You have to take a minimum distribution. So think about it. You have an account, which is traditional, that you have to pay taxes on, or you can take that same money, which is a Roth IRA, and it's tax-free. Which one you're gonna do? The Roth IRA. But most of our community, when they hear Roth IRA, they're like, oh, I don't even wanna know what that is. And it's like, no, that's what you want. That's what you want. And let me explain to you why. I'm day trading in my Roth IRA. And let me explain why that's huge. You've heard of short-term capital gains and long-term capital gains?
Yeah, okay.
Okay, well, let me explain the difference and you'll really get it. Short-term capital gains are for anything that you hold less than 1 year. Long-term capital gains, anything that you hold for a year plus a day.
Okay.
And so guess what? If you hold, if you have a traditional IRA, you're going to pay taxes on that money at some point. If you have a Roth IRA, basically I'm trading, day trading like crazy. If I day traded in what is called a cash account, which is not a Roth IRA, just a regular account, day trading is a short-term capital gain. In my tax bracket, I'm going to pay 40% at the end of the year. So if I made $100,000, 40,000 of it is going to Uncle Sam. No. If I do it in the Roth IRA, it's tax-free. I'm over 59 and a half. Oop, not supposed to tell you all of that. Now you know. Okay. But I'm over 59 and a half. I can pull that money out tax-free. And I'm day trading in my Roth account. Duh.
That's great.
And
that's so great.
And so that's what we need to do. And nobody's telling us this information.
No one. When is your book coming out? When is your book? You know you're supposed to have a book. You know that, right?
Can I tell you something? It's just too much to do in one day. I'm trying to learn technology first. Now, all right. Let me just be honest with you, with your audience. So, Anavia has based. Did I say it right?
Anavia,
right? Anavia. Okay, I got it. Anavia. Okay. So she said to me, David, I want to do you on Instagram. I'm like, who? Work with me, guys. And a book is too far down the road. At this point, let me get with the technology. But
that's your residual income. I'm listening. I'm taking notes now.
But I'll be honest with you. I'm gonna do it. I'm gonna do it, and you're gonna help me. Wait, you can be my co-partner. How about that? Okay.
All right.
But no, you're absolutely right. I do need to do that, but right now my focus is just to get my people to invest.
Yeah.
And to do it in a way that they feel comfortable and they're not afraid. And we'll take the baby steps. And I will share this with your audience. I have had students say, I'm having a problem. Call me. And I will get on the phone with them. And I will have students come on your show and say, yeah, I was on the phone with him. Be truthful for an hour, hour and a half.
Yeah.
And I will do that. And needless to say, once I did that, it was like, oh, I got it now. And they're like humming. I have a 70-year-old student who's actually writing my curriculum.
That's beautiful.
She's wonderful. She's good and she gets it. And so I'm just happy to say that a lot of our people are getting involved, and I just want to see more.
Yeah, that's it. I'm excited. You know, I feel like this is something that has been missing from my features Fridays that I've been having. You know, it's like, okay, we talked about this, talked about all this fun stuff and all these different businesses, but what about the money part? You know, where are we putting our money? Where are we investing? You know, we give so much of our money to everyone else that is not melanated like us. And I feel like we need to really stay within our community. It doesn't mean I'm saying I'm anti anyone who's not melanated. I just feel that we need to definitely put more money in our own well, the way they do with themselves.
First, let's not apologize for saying that we want
Unapologetic.
one another. Ultimately, we don't owe anybody an apology. One,
Yep.
two, let me say
100%.
this. We need to recognize we gave free labor to this country for 400 years.
Let's talk about it.
Then
Come
they
on.
had a mitigated gall
Huh?
to charge us taxes,
Huh?
our tax dollars, creating programs that my let me think of the term because my best friend uses it and I fall out laughing. Oh God, Mela. Oh, I can't think of it now, but he has this term that he uses for non-melanated people, and I just love it. And I need to call him and ask what's that lasted term. But for non-melanated people, they took our tax dollars and created banks that would give them federal government loans to create subdivisions like Left Rack City that they wouldn't allow us to move into. And you know, they redlined our community so we couldn't get loans. So the things that this country has done to us, I am not going to be apologetic about saying
I know that's right.
it is with my own.
That's right. Period.
Unapologetic. We just basically stand up and say, I look for Black business all the time. I use True detergent, okay, because ultimately it's Black owned. In fact, that's how we met, because I went to that Black business in Newark, and to be clear, I basically drove from New York over to breakfast. So, but this is what we have to do.
It's true. It's true.
Support Black business. I will drive all the way across town to another state to make sure I spend my dollar with somebody like me. And a lot of us are saying, oh, I don't want to go through that. No, we don't.
It's too much.
We don't have a choice, because if we don't do it, we're going to fall through the cracks.
You got it.
Believe me when I tell you, that's what is that's what their goal is to make sure that we fall through the cracks. And we haven't done so yet. So focus on where you put your money. Find a Black bank. One United Bank is a Black-owned bank.
Yep, that's it.
There's more than one. Find a Black bank to do business with. Find Black people to do business with. And if you don't like the service that they're giving you, tell them.
That's it. That's it.
And you don't have to be ugly about it. Say, you know, brother, sister, I want to support your business, but I can't because you're not up to par. And I'm not telling you this out of anger. I'm telling you this in love. I want to see you succeed. Let me help you to succeed. Here's the areas in which you need to work on. That's it.
That's beautiful.
And if you don't, then don't support them.
That's it.
But don't badmouth them.
Thank you. Oh, ow. I just had this conversation with a friend today, and I said, you know what? You know, I had to fire some Black-owned business companies that I hired, but what I will not do is badmouth anyone. I'll tell you possibly, or I'll just let it go and I won't use you, or I won't refer anyone else to you, but I'm not going to shame. We've had enough non-melanated people shame us for me to do the same thing. So that's it. I think that's how we build each other up, rather than all this other stuff. And then we'll go find some other company that we work with, and you know, the course not
another Black company. That's all. There's always another one. And I'm a big supporter of my people. And we always got to say, you know something? They had a bad day probably. Because let's be realistic. Living in America is stressful. I'm going to tell you what happened to me. So where I live, they decided that they wanted to, let me just tell the truth. This is going to sound wretched, but I'm being honest, and I'll go get the paperwork, okay? But what happened was, I'm on a higher floor on the lower floors, the pipes, because, you know, after 50 years, pipes start to corrode, you know, metal pipes, they're not plastic. That's what they used back in the 60s. And so what happened was they started to corrode, and the waste line, without having to get graphic, started coming into the apartments on the lower floors. Isn't that a nasty mess? Okay?
Period.
Period. So what they had to realize was that we need to change all of the pipes in the whole building. Imagine doing that starting last July for the whole building. So every day they had to turn off the hot water and the cold water every day. Now they hired a Black company. And so as angry as I was during a pandemic, because think of it this way, if we're in a pandemic and we're the people who are on the front lines having to go to work every day,
right,
and put up with all kinds of madness and crazy from certain non-melanated people not wanting to wear a mask, and you're a fool for wearing one, yet you have to service them with all of their craziness carrying on. Then you have to ride the train to come home.
Oh.
When you come home, the last thing you want to deal with is no hot water, or no running water. How you gonna cook? How you gonna take a bath? So you had to take a bath either at 1 o'clock at night when the water finally got warm, or 5 o'clock in the morning. But then you got to get up and go to work. You got kids.
Yeah.
Going on from last July until February, March of this year. Every day. And so I had to finally say to management, I had to say to them, look, I know y'all got to do what you got to do. Realize that as Black people, we're already catching hell for at least 10 hours out of the 24 hours. Now we're supposed to be able to sleep for 8 hours. We can't even do that because we got the banging of the pipes and you know what I mean? And all of that going on and the disruption in our units. And it's like, it ain't right. And this is why I'm saying to you, as a people, we are dealing with enough as it is. I personally think that the United States government needs to pay for therapy for all Black people.
Wow.
It should be free.
By minimum.
It should be
and our 4 acres and a mule.
Guess what? We're gonna get that out the stock market. We ain't gonna wait for it. We're gonna take it.
Come on now. Come on, Al.
That's it. That's it. Okay. So we have to change the way we do business. And I want to say to my people, I love y'all. Stop giving away your culture.
Yes.
Especially stop giving it away on social media for somebody else to capitalize on it.
Wow. Talk about it.
TikTok, y'all need to get off of TikTok. Okay. I'm just saying, get off of TikTok and stop giving away your good golden money and monetize your own culture as opposed to letting everybody else do it. The Kardashians. I didn't say that. Okay. I just had to get that off my chest. It's just been burning a hole.
You're so bad.
Get honest.
While he sips his tea.
So my question for you, what time is it? It's 1 o'clock. It's time for me to get back to work.
Okay.
What do you need from me besides to tell your wonderful audience that we're going to make them whole by showing them how to make money in the stock market? Simple. Tradingisnothard.com. Tradingisnothard.com. Please sign up. We are going to take the month of August off the last 2 weeks. So you can basically get in for the first 2 weeks, and then we're going to come back on the, I think the 6th is Labor Day of September. So we'll start classes every Wednesday at 7 o'clock. And that's for the basics. The advanced course is on Thursdays at 7 o'clock. And we do obviously tape the session so that you can see it 24 hours later.
Right, and your company name is also the name of your website.
Yes, tradingisnothard.com.
There we go. So we know where we can find you, and that's great. I appreciate you so much, Al.
I appreciate you more, and if you need anything, don't hesitate to call me.
Yeah, so you're going to share this with me so I can share this with my.
Absolutely. It may take a little bit for it to down. Now, you know, I'm not technologically savvy. So as soon as I figure it out, let me ask you a question. Actually, let me pause this. Bear with me a second. Wait a minute. Wait. We up here. We up here. That's that one. Stop the recording.